Hey everybody, it's Pete. Good morning. Welcome to a new episode of Stock Trading for Beginners. Have no idea why I keep doing that. What we're going to talk about today, I think, is by far the biggest problem that newer traders have, especially, but even experienced ones, and that's actually trading too big for the position. So you do this really good job of finding good ideas. You enter the trade, you have your risk, you have your reward, you have your profit target, and the trade kind of wiggles around, stops you out, and then does exactly what you thought it was going to do. Generally speaking, that happens because you have too much share size and you're focused too much on the P&L, the dollar amount, right? And you have good ideas, but you're not making money on your good ideas. So if you think about it, what we need to do is take all of that emotional energy out of losing trades and do it in a way that's repeatable so that you never hesitate to get into a trade because you're okay with the risk. If the trade happens to move against you, you're okay with taking a loss because before the trade even started, you're like, okay, that's a dollar amount I'm willing to put at risk. And then when it moves in your favor, you now have a nice position that you might consider to book profits or even add to that position if it's working out. So what we're going to do is I have this really cool, super simple spreadsheet. Now, don't go, oh my God, spreadsheets. I built the whole thing already for you. All you have to do is download it. I'll show you how to download it in a second. I'll show you how to plug in the numbers. Super simple. And we're going to use a sample size account of $15,000 just so it's super easy. Anybody could use it. We're going to actually use an example of a stock of what the share size would be. We're going to use NIO, as an example. And I think you're going to like this one because this is really a foundational lesson, a foundational part, which should be a part of any trading plan. And I'm going to use it in context, the word correct, trading the correct share size for your risk tolerance, your account size, all of those things. So I really hope you enjoy this. It's something that is a core part of everything I do in my trading, right down to way back when I first started trading in 2000. So I think you're going to like it. If you find this video helpful, definitely click down just below the video and download this copy for yourself, and I'll show you how to download it. And if you find it helpful, definitely subscribe to the channel. I'd really appreciate that. And if you want to learn how to trade together, click down and learn about the boot camp too. It'd be really cool to see on the other side. So let's head on over to the screen. We're going to use an example stock, and then we will, I don't know why I'm looking around, and then we'll go right into the spreadsheet, okay? So we're going to start out on NIO, and how you calculate your stop loss really doesn't make a difference. We're just going to use this $50 stock. But let's just say, for argument's sake, let's say you bought here where the stock turned around, okay? And for whatever reason, let's see, the high of that candle was, let's just say $46, just for argument's sake. So we're going to use 46 as the entry price, and we're going to use, again, just keeping the number simple, 42 as the stop loss. Okay, so we're going to calculate that, and we're going to say right up there is where it exploded to last time. So we're going to say 57. So we're going to say, again, not using a trading strategy here, just walking through how to use the spreadsheet. So we're going to use 46, 42, and 57. Now, here's what's kind of cool about this spreadsheet. Now, over here, you can see download your copy. You would click File, Download, and Microsoft Excel. So pretty simple, right? So we're imagining a $15,000 account. Everybody's account has different share size, right? Now, what's interesting here is about the percentage risk per trade. This will go up and down as your account goes up and down, but the dollar amount will always be a number that you're comfortable with, which is super important. Because like I said at the beginning of the video, if you accept the fact that you're taking risk, if you accept the fact that there's a dollar amount that you're putting in harm's way in exchange for the profit, if the trade should happen to move against you, no big deal. You're like, okay, I was okay with risking 2% on that trade. Now, what makes that number? Now, brand new traders in the boot camp, they generally start out with even less than 1%. They'll go to 0.5%. And while you're learning, you want to keep your risk down so you can get some experience, you get some feedback from the community, you can learn how to find good ideas. And after a while, you start to see consistent winners. And then maybe you move it up to 1% of your account. Then when you become super experienced, then you can really just determine your risk per trade based on the quality of the idea, what kind of day it is. Some days everything might be perfect and everything's going to the moon, and you may risk 3% or 4%. Other days might be a really tough market. You might lower it to 1%, or maybe you don't even trade at all. So what I want to talk about first is that's how that's calculated. Okay, this you could put in whatever number you're comfortable with. It assumes 2% just for the example here. Okay, so we know now based on this, 2% of the fictitious account is $300 per trade. So we're okay with risking that based on our ability and our account size. So that number comes in here as the dollar amount risk. That's the most important part. And we said our entry here is going to be $46 in this example. We also said that our stop loss is going to be $42. So what that means now, based on the dollar amount per risk, the entry price and the stop loss, that means that we are risking $4 on this trade for a $300 risk. And this automatically calculates. That means that because we're comfortable in this trade, 75 shares is the right amount of shares to trade in this situation. Now, what's kind of cool here also is we calculated our minimum 3-to-1 risk reward on this trade automatically. So if we're risking the difference between 46 and 42, that's $4, and 4 times 3, earning 3 for the one that we risk, is 12. So that would be the initial profit target. Now, in this actual instance, what we actually said was the profit target was 57. So we were kind of close on 3-to-1 right there, right? So the next thing we want to do is we want to know exactly where we got out on the trade and how much we made or lost on the position. So let's just say, for argument's sake, everything worked really well. Trade moved up in our favor. We earned $12 in this case on the trade. You can see it calculates it automatically. And on this position, it moved 26% after our entry. Now, what's kind of cool about this is that it allows you to unemotionally manage the position because you already accepted the dollar amount. And I'm going to come back on the screen in a second, but this is so critical, I can't even explain it. And I'll explain, I can. I'll talk about it right now. So this is a very simple way of calculating what you believe is the right dollar amount based on your experience. Now, in my 20 years of trading and all the people that I've mentored and coached and managed my own account, this is the simplest way to be okay with how much you should risk per trade, because it makes it easy. And I'll get back to why in a second. But the thing I want to talk about here is the share size, the risk reward, the actual dollar amount of the risk reward. Okay. But this part here, if you look up here in the function, it's based on 2%. So if you want to risk 1%, you would just go up in there and you would change that to 1 or 3 or whatever number it is you want to risk per trade. So I'm going to come back to the screen, and I just can't express how amazing this becomes for you, how how much easier your trading is prior to putting the trade on, that you say, you know what? I'm okay with risking X amount. So whatever your account is, if it's 50,000, 10,000, 100,000, a million, it doesn't make a difference. You plug the number in that you're comfortable with. So you say, you know, I'm going to risk 1% of my account. If that happens to not be a winning trade, I'm okay with that. And as the trade is fluctuating, and even if it gets down to your stop or slowly moves in your favor, you're okay, because as a trader, as somebody aspiring to be really good at this, you want it to be repeatable. You want it to be something that you can execute and trade flawlessly. And that's what this helps you do, because before the trade even started, and here's the key to the entire video, before the trade even started, you said, you know what? I'm okay with that dollar amount as a business expense in exchange for this deal I'm about to do in this Microsoft trade or Neo trade or Apple trade, whatever stock it happens to be. And that's a beautiful thing, because it's kind of like just running any other business. You're like, okay, I got to pay the electric bill. I got to pay my employees. I got to pay the rent. This is no different. A trading loss is a business expense. But what's really cool about this is the better job you do of finding good ideas, where what we call trade expectation, where there's a good probability of the trade moving in your favor, the better job you do of finding good ideas, it even becomes less emotional accepting the risk, because there's a good chance of you earning a profitable trade. But as we all learn, the odds go up and down based on our experience, based on how good the market is and that kind of thing. But here's the key. Even if it's a tough market, even if it's a great market, none of that matters because you're choosing the risk prior to the trade for what you're comfortable with based on those certain situations. Great market, tough market, new trader, experienced trader. It's the number that's right for you, which is really what makes it personal and super easy to follow. So that's the basics of it. Download your spreadsheet now. If you have questions about how to use this specifically, leave me a comment below the video. I'll be more than happy to get back to you as soon as I can. And good trading, and please subscribe to the channel. I'd really appreciate it. Have a great day.